To better understand this, let's talk about the 5 possible outcomes to any trade. There are only 5 ways that a trade can end. You can either make a small profit or a small loss, you can make a big profit or a big loss, or you can break even, getting out of the trade and scratching it for nothing. As I've already clearly stated, what you want to completely avoid in your trading is small profits and big losses. This is going to lead to absolute destruction in your trading accounts. What you want to put all your energy and focus behind is making big profits and incurring only small losses. Just like the t-shirt business that we're speaking about, if it costs you $10 to make that t-shirt, but you're selling the t-shirt for $15, then your profits are going to be larger than what the cost is of running that business, and you'll be net profitable. And the same goes for trading. As long as your winning trades are larger than your losing trades, you'll be net profitable over the long term. There are various different combinations of these trading outcomes that we can put together and what those combinations will result in. Going through these various combinations of trading outcomes and looking what emotional responses you'll get from such trading outcomes, when you combine them together, big profits with big losses, this is an emotional roller coaster. You have massive swings in your trading portfolio, your equity curve goes higher, and then you have a string of big losses which pulls it all the way down, and it's just absolute havoc and difficult to trade through such a massive swings in one's trading portfolio. The other outcome was small profits with a small loss. Here you pretty much feel like you'll be wasting your time and you'll be very frustrated as a trader. The small profit with a big loss, as I've mentioned, you'll be a consistent loser, and this is where most novice traders find themselves. And ultimately, what we want to focus on is big profits with small losses, and this will result in consistent profits and successful trading. This is where you need to focus your time and attention. This is what I want for you, and this is what you need to want for yourself as well. So now, how do we take this all back to our example of a casino, and how do we turn our trading into a casino? Well, it's very simple. We replicate the business model of a casino and we rig the game legally to put the odds in our favor. In order to achieve this, what we need to do is we must study the market to find repeatable price action patterns that give us a forecast in what could possibly happen with future price action. This is not a guarantee. This is not a definite. This is a forecast into what might possibly happen with future price action. Think about the casino and the game of roulette. Does the casino know on a spin-to-spin basis of the roulette wheel whether they're going to win or lose? They have no idea, but they know that over a large sample of spins of the roulette wheel, eventually their edge and their statistical edge will prove favorable and they will be net profitable. And we need to approach the market in the same way. We need to find a repeatable price action that gives us a forecast in what could possibly happen with future price action. If that does happen and it repeats itself, great, we make a profit. If it doesn't and it goes against us, we get out of the trade and we cut the trade early so that we only make a small loss. We can do this in several different ways. There are a number of different ways to trade the financial markets. You can do this through chart patterns, indicators, support and resistance. There are numerous different trading systems out there in order to trade the financial markets. But these repeatable price actions are not a guarantee, as I've mentioned. They only give you a statistical edge over the market. The other big thing to remember when it comes to the casino and the game of roulette is that it's a one-to-one in terms of profit and loss in the game of roulette. So for the casino to be profitable, they need to win more than they lose. What do I mean by a one-to-one? So as I said, if we're going to bet on a red number landing on the spin of the wheel and we put $500 down, we can only double our money. It's a one-to-one. We either lose $500 or if we right, we get our $500 back and another $500. It's a one-to-one. We can't get the 500 back and 1,000 back if we bet on the red or black strategy. However, it's different in trading. In trading, your profits can be larger than what you lose. You can have a 2-to-1, 3-to-1, 4-to-1. Some trades I've taken, I've made 10-to-1, which means for every $100 that I risked, I made 10 times that in return. I made $1,000 when I risked $100. that's a 10 to 1. A 2 to 1 would be a $200 for risking $100. So in trading, your winners can be larger than your losers, and you can have more losing trades also than winning trades and still be profitable. Well, you might ask, how is that possible? Well, let's do some basic maths again. If you have 50 winning trades at $1,000 and 50 losing trades at $1,000, those two cancel each other out. And overall, you would be break even in this example. But let's say now we can increase our winners and we can make the winners slightly larger than the losers. If we have 50 winners at $2,000 and 50 losers at $1,000, that would say that we would lose $50,000 on our total losing trades, but we would make $100,000 on our winning trades. And when you minus those two from each other, you are net profitable $50,000. But in the example of having less winning trades than losing trades, if we only have 45 winning trades still at $2,000 and we have more losing trades, 55 losing trades at $1,000, you'll notice that we are still up $35,000. And because we've won only 45 out of 100 trades, that would put our win-loss ratio at around 45%. And most trading systems out there range between 40 to 45%, and that's a pretty good win-loss ratio. There are other trading systems that are higher than that. You can be over the 50% mark, you can be 55%, 60, 75%, but then sometimes certain other areas of your profitability gets affected. The higher your win rate, often your win-loss ratio or your profit factor, the 2 to 1, 3 to 1, 4 to 1, tends to be a bit smaller. And often when your ratio and your win-loss ratio is a lot lower, call it 40 to 45%, sometimes your profit factor can be quite high, 5 to 1, 6 to 1, 7 to 1, depending on your trading system and methodology. My own personal trading methodology and system for the markets, my average win-loss ratio is about 47%. So I'm below the 50% threshold, but my winners are far larger than my losers, and I am net profitable every single year. The key thing to remember here is you have no idea if your next trade is going to be a winner or loser. Exactly like the casino, they have no idea on that particular spin of the roulette wheel whether they're going to win or lose on that spin. But they know over a large sample of spins, they will eventually become net profitable. And you need to look and approach your trading in the exact same way. And that, ladies and gentlemen, is how you turn your trading into a casino. And our trading is not gambling if you do it correctly with a system, a strategy, and an approach that tips the odds in your favor statistically.